So, but on the இதில் So, good morning, friends. So, welcome to Maruti Coaching. So, for this very special session, so it gives immense pleasure to all of us to welcome you to this session. I'm sure that all of you are going through some very difficult and tough moments. And at this point in time, writing a CA examination, it's going to be extremely difficult because of the fact that you don't know when the examination. Again, a lot of people ask the question whether the examination will be held, will not be held. So again, the uncertainty continues, though the dates were announced as July 5th. I think all of us will be still thinking, will it be on? So I'm hearing a lot of times many students asking the questions are, what will be the position? Will the exams be on? My simple suggestion to you is that don't worry about whether the examination is going to happen or not going to happen. Let's not think too much about it. Or let us assume it's happening and proceed. And at the end of the day, you are not going to lose anything. No, right? Fine. You're going to only enrich yourself. So your knowledge is going to go up. I think let's focus on that particular point. Before we start the income tax session, I take this opportunity to welcome the other faculties who are also here to share a few thoughts on the subject before I take over. So you have the one bottom to me, Prashant, who handles costing and financial management in Maruti. And to the my right extreme, Vijayalakshmi, she handles the accounting classes. And to the left of her, S.B. Shah, who's very, very young, energetic person to join. Not that others are not young, but I'm thinking is, as the face will suggest, that he's youngest of the lot. And so he has taken up the responsibility of treating you with law. So what I will first do is ask each one of them to share a thoughts, because at the end of the day, with close to 30 days, exactly 1 month from now, assuming that the examination goes on at the scheduled date, suddenly I think no one expected the institute to announce the examination on July 5th, because many faculties were saying no, the examinations may not happen. That's what many students are telling me. So therefore, I think most of the students are not prepared by itself for first the examination. They were shocked examination on July 5th, and still they are gossiping as to whether it will happen or not. At the moment, I can tell from my limited this thing, I think institute right now wants to hold the examination at the scheduled date, because with cases dropping, if this way it happens, I think they will hold the examination. Though some parent association have written to the government, but I think at this moment, as it stands, the examination will happen on the scheduled date. So therefore, we'll keep that as a base. I'm sure that has surprised all of you. And therefore, these three people will just give you confidence that what you can do in the next 30 days to show that these examinations can be cracked with a little bit of a planning. So let that surprise is already on, but we'll take it up and we'll allow the people who are experts in the respective subject to share a few thoughts, which will give you a lot of confidence. After that, so I will continue with the MCQ questions, which will not only help you in income tax, which will also help you in all the other subjects. Because what I'm going to do is the approach to MCQ with income tax as a base. I'm sure that that will take you to a distance, because the process is same. How to interpret, how to read an MCQ, those are going to be simple, but it's going to be common for all the subjects. With that, you can crack close to 100 marks is my gut feeling, provided you're able to understand the session. I will give you what is that question, what is that is intended the question, how do you interpret the question, how do you eliminate the choices. So those few nuances I'll teach you, which will help you in handling not only in income tax, but you can handle in all the 4 subjects. With this brief introduction, let me hand over the proceedings for a few minutes to Prashant, who handles costing financial management. He is a rank holder in his CA examinations. He's also a cost accountant. So it's definitely one thing all of us in Maruti have done is we have made the life easier for the CA students in that I think ours is one institution which always feels the entire course is a journey and you should focus on the journey and not the destination. And our class always used to be fun, so we used to really enjoy the sessions. And that's what we always want. And because if there's no point in 6 7 months of total irritation or total some kind of tsunami in your heart, and then waiting for the exam result to come and put pass in Facebook status. That 1 minute, I think 6 7 months, we should not go through a torture. I think we have ensured that the journey is as fantastic as the destination. With those few words, over to Prashantji.
Good morning. Thank you very much, sir. Just wanted to extend what sir is saying. So there was an important question asked, which is more important, the journey or the destination? And one very interesting answer that I got is it is neither the journey nor the destination. It's the company that we keep. And as sir was suggesting, so this preparation time for about 8 months or 9 months, the company that we keep in classroom and otherwise will actually help us go a long way. I've got 3 to 5 minutes to do a roundup on what we do in the next 1 month or so. Without much ado, I just want to make this custom. Every time I speak to students, I start with thanking sir for whatever I am. So just wanted to thank him one more time and begin today's session. Students, just wanted to give you a couple of points. One related to academics, one otherwise. One very important aspect. We are all going through challenging times. We all know that we've heard it, and I'm sure in today's session, you or your own close relative, your own family member might be COVID affected. I just wanted to send this message across to you guys. Please stay strong. We're all together in this. If you have any issue, challenges, you can feel free to seek any help from all of us here. We'll be more than happy to lend our helping hand. So that's one message I wanted to tell you guys. And as regards exams are concerned, as I was saying, we don't have control over what's going to happen on examination scheduling, it's going to postpone or not. But what we have within our control is our response. So our response to the announcement that it's going to happen in July 5th is what we're going to talk now. So there has been an announcement that it's going to start on July 5th. So now let's respond. I just wanted to tell you guys about how you actually approach the examination. I approach every exam, and I say so saying I've done my CSCW MCS. So when I write an examination, when I pick up a question paper, when I prepare for my examination, I focus on what I know. Okay, so what I know is what is going to help you. I'll give you a small example. Let's pick up an examination question paper. So you have a question paper with let's say 10 questions, and on the day of the examination, you read through the 10 questions, and let's assume small example. Let's assume 2 or 3 questions. You're clueless. You're not prepared for those 2 or 3 questions. I just gonna ask you one simple question. So now you have 6 or 7 questions which you fairly know, which you're confident about, and the other 2 or 3 questions which you're slightly less on confidence. You're not prepared. You're feeling clueless, or you're probably not very sure about how to go about it. Tell me one answer. Which one's going to help you pass the examination? Is it going to be one that you know, or going to be the one that you do not know? Okay, so the answer is very simple. Play to your strength, play to what you know. So, what you know and what you've read and what you prepared is actually going to help you rather than what you do not know. I will tell you a simple reason. you can attempt an examination with how much ever preparation that you're going to take. It is not like it is a finite number. It is not like if you're going to spend about 40 hours or 50 hours or 60 hours, you know everything about financial management. Learning is eternal. We all know that. So there's no finite numbers to how much we're going to prepare. So when we have that scenario, it is up to us to see, to crack that 40 marks, to crack that 50 marks, how much time is needed. That's one. Second, when we have limited time, we are at one hand saying learning is eternal, there is no end. This is limited. The other hand, we have only limited time. So we all know this. July 15th, the exam. So till July 4th, how much time do we have with us? That's a finite number. And with that available, how much time is available for one subject? That's another finite number. Imagine you're writing one group of papers. If you imagine we have about 240 hours and you break it down into 4 hours, 60 hours per subject. You're writing two groups, you can do the math and find out how much time you have. Now the question is, with that time, how to make the best use of that time. And financial management is
No.
is one paper where you would be able to actually
Uh,
maximize your scores out of the 60. So you can actually score 35 to 40 marks by spending 30 hours 30 to 40 hours of time that you're going to devote. And how do I go about it? We need to be a little smart and be a little more analytical in going about this examination and this question, this paper. So I would give you a plan for preparing your exams. Even if you're going to come to me on July 1st, if you have 4 days left out for your examination, I can still give you a plan to go. But I mean, and anyone can do it. You have a limited time available. With that time, what best can you do towards your examinations? Now that we have 1 month, I think we can focus on this particular paper and score 60-65% very easily, even if you're going to start from scratch. I don't know the subset of the student group that I'm talking to, but I'm sure each one of you guys at different stages of preparation, right from not yet prepared, not yet started, till about okay, I'm a little confident about financial management. We can push the scores of each one of you guys sitting there. Someone who's very confident, we can push you to get a rank. Someone who's aspiring for a rank, we can push you to get into the first top three ranks. Someone who's not yet started, we can give you the confidence to go and attend the examination and come out and say, I'm sure I'm going to crack this 45 to 50. So this is required. What is planning and looking at time available vis-a-vis how you prepare in a very smart way. So two things. One, challenging times, COVID. You need help. Please let me know. Please let us know. We'll all be in this together. I know it takes a toll on your mental health, but stay strong. This too shall pass. We're witnessing something once in a century. So these are strange, weird times. You might get a feeling I don't know what's happening around, but we're all this together. That's one message. And second, financial management. You guys can crack this examination with a lot more confidence. So this is one paper which is I mean I like both FM and economics, and for the financial management part, I'm very sure 60, 35 to 40 marks, even if you're starting at zero today. So I'm talking about those students who are not yet prepared, not yet started. To be very frank, I don't know where the institute material is. I'm going to search for the financial management study material. For those guys, I'm saying if you're going to start today, you're going to invest this time, work hard towards it, work smart towards it. You can score that 35 to 40 marks out of 16 financial management. So all the very best to all of you writing in this examination. Thanks for this opportunity to serve, and over to you.
so for a short and a wonderful morale boosting talk. Now I invite Vijayalakshmi, who takes care of accounting. So, for the benefit of those who do not know, there was a time where I used to be like Simbu's father, T. Rajendra. I don't know whether you know Simbu, but at least I'm not sure whether of you know T. Rajendra. I used to take accounts, costing, FMC, story, dialect, everything is me. So before these guys relieved me of all these, I think the only one subject I have not taken is ITSM. So interestingly, that is the one subject where I scored the maximum marks. I do not know how, but still, that's the least spent and maximum marks. Thank you, Prashant, for relieving me from costing and FM, and thanks, Vijay, for relieving me from accounting. In fact, accountancy is the second subject I took. First subject I took was mathematics. The second subject I took was accounting. So I am a perfect accounting follower. First in, first out method. First subject I took, first subject I left. Second subject I left is accounting. But I must thank Fuji for filling up the gap so that I don't have to seriously feel that I'm missing out on accounting. She is also a chartered accountant, cost accountant, and she normally very very proud first bencher of Maruti classes. So the three of them used to come, put the kerchief and put the seats and all. Welcome, Vijay. So please share your thoughts because as I told that everybody is just looking for the sudden announcement of the examination. I think everyone needs some kind of guidance for them to really confidently go through the next 30 days. Over to you, Vijay.
Good morning, all of you. Uh, yeah, those are golden times when sir used to take all the subjects, and we were the fortunate batch to attend all subjects with TGS sir. So even in this ITSM portion, we had this OR. So even that sir had taken. So we were really fortunate enough to attend everything with TGS sir. In fact, that is my foundation, I would say. Now, most of it Prashant has actually told you, so I just don't want to repeat those things again. I'll just go straight to how you got to hit in this 30 days. I'll just show you basically got a just give me a second. Sir, can I share screen?
Yeah.
Yeah. Yeah. So actually, as Prashant was rightly saying, like it is a journey. Don't look at, as teacher sir was saying, don't look at the destination. Just enjoy the subject, learn the concepts thoroughly, and then just go and hit the exam with full confidence. And you can crack it very easily. And I just got an analysis of the past question papers, a quick analysis to just show you how you get that 40, next benchmark 50 for the aggregate, next benchmark 60 for getting an exemption, then the limit is 100, right? So we'll just quickly just show you how the question paper is and how with very limited areas, if you are very thorough in those areas, you can just hit 40 very, very, very easily. So with this one, just 30 days to go for you. 3 chapters, 40 marks is a very big conversion. So I'm not able to share the screen. Not sure why. Okay, fine, all right, not a problem. Are you able to see the screen by chance?
No, ma'am. No.
Not it, right? Okay. Sir, if you could just do one thing, there is a power cut on and off. I think maybe net is slow. Just give me 2 seconds. Let Yash continue. Let me just switch on the net to Wi-Fi. That is a connectivity problem, I think. So that's why I'm not able to share. Or I will just give you till the time the file loads. Let us just go on with what is there in group 2. The major 3 chapters which you got to really learn and crack that 40. Just go for consolidated financial statements, which was like brought from final, brought into inter in your new syllabus, seen as a nightmare, either as a very easy chapter or as a nightmare. Nothing. It's a very easy, normal accounting chapter. Hit on consolidated financial statements, dissolution of partnership firms, a chapter moved from group 1 to group 2 from the last attempt, hit on that, and amalgamation of companies. Just with these three, 15 every attempt is for sure. Okay, on an average, if you put all three together, rest assured of 45. Okay, plus chapters like liquidation of companies, buyback, ESOP, small chapters with some 5 to 10 marks together. You have not hitting, now hitting on. If you just go few accounting standards, pick few, you score minimum 60. Okay, so this is how you just have to plan and hit for 40, 50, and then 60. Now this is just because we are in the last 30 days. Now in that, again, if you just look at the questions,
Sir? So I guess ma'am had the power issue, so she's off the session now, I believe.
Yeah, yes, you can just share a few words now. So
yeah, sure, sir. So good morning, all. So as sir said, thanks for the opportunity for guiding you through your success. It's the last 1 month available for us to just crack the exam and come out with flying colors. So I just run you through the chapters of law, basically a paper tool, corporate law, and other laws. So I just share the screen. Yeah. So as sir always puts it, that you should always plan your work and work out your plan. Only that is the key to actually cracking up any activity for that matter, not only examinations, whether you come up to work or anything in life. So that is the first motto which all of us should follow, which is nothing but plan your work and work your plan. Second, if you see our paper, the corporate and allied laws is basically divided into two aspects. I mean, 70 marks of theory and 30 marks of MCQs. So I have just consolidated here and made just an analysis of the last four examinations, which follows this particular pattern, which started this MCQ pattern since May 19. So if you see here, as per institute norms, first I'll talk about the Companies Act, which is of 60 marks, and the other half is basically nothing but the other laws, which we have four laws in it. So first, if I talk about the Companies Act 2013, the first four chapters, that is the preliminary, incorporation, prospectus, and share capital and debentures. That, as per the institute guidelines, the weightage of marks is 25 to 40, so close to 10 to 17 marks of that 70 which we are talking about here. That is, the one which we are talking about here is basically the theory part, which is going to be covered here. So 10 to 17 marks of the theory is covered from the first four chapters of the Companies Act. Similarly, if you see the acceptance of deposits, registration, and management and administration, that covers close to 25 to 35, which is in terms of marks, it is 10 to 15 marks, which it covers. And the last three chapters, which has been pushed from final to the inter syllabus, that is section 123 to section 148, where it ends basically the dividends till the audit and the auditors, the last section being the cost audit for your syllabus, the Companies Act 2013, Section 148. So that is covering close to 14 to 17 marks. So if you see this weightage, you'll see that chapters 5 to chapter 10 is being asked in all the examinations on an average. So these chapters, I would say that from the chapter number 8 to 10, which is basically from section 123 to 148, 25 sections, is just giving you close to 14 to 17 marks in your examination, and which is more or less also connected with your subject called audit as well, in which you also study about audit and auditors. So it is more or less correlating both the subjects together, wherein you can easily score marks and have a quick revision in both the subjects. So I would say that concentrating more on chapter 5 to chapter 10 would easily help you out in scoring close to 40 marks out of your 60 marks in the Companies Act 2013. And whereas a few portions of prospectus and share capital, a few important aspects which has to be covered, that if you see, there's more than enough for you to actually crack an examination with an exemption with 1 month in hand. Then when I compare that with the other laws, which is close to 40 marks, I would say that the Negotiable Instruments Act, if you see the last four examinations pattern, easily up to 10 marks comes from the Negotiable Instruments Act. I know it's a quite big act, but comparatively, if you go through by concepts and through the sections, it is very much easier for you to understand that and score easily. And then we have this Indian Contract Act, wherein the Unit 1, which is divided into three topics which are covered under Indian Contract Act 1872, which is Contract of Indemnity and Guarantee, Bailment and Pledge, and Agency. Under that, Contract of Indemnity and Guarantee is being tested very often in the examinations, close to on an average, it has been given 6 marks in the examination out of the 8 to 10 marks which has been asked in the last 4 attempts. And the last two other acts, which is nothing but interpretation of statutes and the General Clause Act, are more generic and not specific, but to understand all the other acts, these two been added at the inter level in order to understand what we have it in the final when we go to the advanced laws. So that comes to 4 to 7 marks of your examination. So based on this, if you see the analysis, I would say that from now on, if we concentrate on chapter 5 to chapter 10, as I said, in the Companies Act and the Negotiable Instruments Act and the Indian Contract Act for the Unit 1, we can easily score an exemption by studying this particular in the last 1 month, having a quick revision. And as Sir said regarding the MCQs, it's just how you strategize your examination on the questions. How do you go through that is the one part which Sir will help you in the coming session. And all the best for your examinations, guys. So over to you, Sir.
Thank you. Yes, it's a very
Yes, sir.
good, wonderful presentation. I think I'm sure that this will give them a lot of confidence, because at the end of the day, what we need now is only the confidence part of it. It was really, even I wanted to write the law exam now. So, so that's
Thank you,
fantastic.
sir.
So now, so I invite the last of our speaker now, Satish. And I used to really get fascinated by his auditing, because I never seen somebody making auditing so interesting. In fact, I was sitting for one or two classes of him, just to enjoy his classes, because to make a subject like an auditing interesting is requires a great talent. So Satish is a chartered accountant. He works for a multinational company, and is a phenomenal uh, teacher in theory subject. I think I have not seen. I'm generally not a great listener of theory subject, but I think so. He has made me listen to his lecture. So I think that underlies his fantastic skills. So he takes care of auditing, and he also take care of Companies Act. Satish, welcome. Despite some, of course, every family today is impacted by the COVID. Despite all these things, with a very short notice, he has come here to share a few thoughts. On behalf of the entire classes and for the students, I really personally thank you, because I know that what you're going through for the last 1 or 2 months, with all these things, you took some time with a very short notice to come and address. Thank you, Satish. So over to you.
Thank you, sir. So, good morning, everyone. See, yeah, I think all the other speakers have already covered all the points, but a couple of points here. Number one, like say, while all of us are in lockdown, everything, but that gives us an opportunity to spend more time and study. Okay. While we may look at like say another 30 days or so, but 30 days is good enough for someone to revise and clear the exam. So first have that confidence in you, number one. Two, coming to my subject, like say there are some critical areas which you need to focus upon. Okay. One, like say the engagement part and the audit planning. That is very crucial. And two, the risk control, risk assessment, internal controls and materiality, and company audit, which includes fraud reporting. These three will be good enough for someone to clear the exams. And if you cover the other standards on auditing, which basically comes in your first module, that will be good enough for a person to score an exemption. Having said that, like say the way I would request all of you to look at auditing is like say some of you may be doing articleship. See, some of you would have come across some practical situations. Try to link the theoretical concepts to a practical situation. That will make your studies far more easier, and the understanding will be much better. And for whatever queries, whatever you have, I am always available. You can reach out. Perfectly fine. Anytime you can call me. So available to take care of your this one. Good luck to all of you. Study well. You still have sufficient time to prepare well and clear the exams. So have that in mind. Focus on your studies, and all the very best to all of you.
Thank you, Satish. Thanks for your time. So we'll soon see you in the classes. So take care of yourself and your family.
Thank you, sir.
So
Thank
thank
you,
you,
sir.
Prashant. Thank you, Yash. So thank you, all of you, for coming at a very short notice and share your thoughts. I'm sure that this would have given them the confidence which they are absolutely needing now. So, okay, thank you. Bye bye. So, see you.
Thank you, sir. Thank you, sir.
Thank you,
Thank you
sir.
so
Thank
much.
you.
All the very best, student friends.
All the best, guys.
Right, friends, it's now time for our show now. So, see, what I have planned here is that, as I told you, the idea behind will be to ensure that not only income tax is taken care. So my objective is to ensure that you are able to handle any MCQ. So that's the whole idea. Uh, So therefore I may be going a little bit slow. For some of you may be very fast, because I know generally in the MCQ session, so what we normally find, uh, the students will be jumping with the answers. That's the kind of speed at which people provide the answers. So only thing is that the idea, as I told you, is to interpret MCQ, how to handle. Those are our ideas, and therefore we'll go a little bit slow. Maybe we can pick up speed. Maybe when we take a small break, we'll at that point of time, post break, last 1 hour, maybe we can try a little bit of a speed. But right now, instead of focusing on the speed, let us try to focus on how to interpret the whole MCQ and how to approach, how to eliminate, how to take a proactive role. So are you able to see the screen? So let us take the first question. I will first try to read the question. Take some time in understanding the question. The only one point I would like to add here: in examination, you have 180 minutes, 100 marks. Right? So that is one thing which you should bear in mind. That means your MCQ question of 30 marks has to be finished off in 54 minutes of time. So if you get a 1 mark question, you have 1.8 minutes, which is less than 2 minutes. If it is a 2 marks MCQ, you have roughly 3.6 minutes. So that means we have to read the equation, understand the equation, and quickly give the answer in about less than 2 minutes of time. That is one very, very challenging aspect of MCQ. So therefore, what I am going to really guide you is to how do you go about doing this. Mr. A was working with XYZ. He died on 30th September 2019. On death of A, Mrs. A is receiving a pension of 15,000 per month from the company. So the amount taxable in the hands of Mrs. A for the assessment year 21-22, 90,000 under IOS, 90,000 under the head salaries, 75,000 under income from other sources. So 1,65,000 under income from other sources. So first, let's try to read the question, understand the question, and then we can proceed. As I said, first few questions definitely we can take more time. So once we understand and appreciate, then afterwards we can always increase the speed. So I have close to around 100 questions there. Maybe all the 100 questions we may not be in a position to solve, but still the idea is not to solve 100 questions. The idea is to ensure that you are able to do any question. So that is the whole idea. So no. So so basically, what is the main point here is that, so in order to come under the head salaries, the employer-employee relationship is required to come under the head salaries. So when there is no employer-employee relationship, then the income cannot come under the head salaries. Here, the pension is received by the family member So therefore, the income cannot come under the head salaries. So therefore, what happens if you just look at the choices here? So your 90,000 under the head salaries as option B straight away is going to go out of the discussion. It's not recovered at all. So whereas if you take the other options, now in the case of family pension, there is a standard deduction of 15,000 rupees is available. 1/3 or 15,000 deductions available. So therefore, the answer definitely cannot be 90,000. The first option is also not going to be there. That means we are able to eliminate straight away the two options. So therefore, what it leaves now is going to be either C, which is 75,000 under income from other sources, or D, so 1,65,000 under income from other sources. Those are the two options which are now going to be there. Now, most people generally what they try to do in the examination, they try to take the answer as 75,000. Now, the reason is the second line of the equation. He died on 30th September 2019. So therefore, instinctively, what we try to do is we calculate this for a period of 6 months. Now, 6 into 15,000, 90,000, less standard deduction of 15,000, 75,000. This is the most popular answer you normally get. So this is the most popular answer which we normally get. But however, the question is for assessment year 2021-22. The question is for assessment year 2021-22, for which the previous year will be 2021, for which the previous year will be 2021. Now, he died on 30th September 2019. Previous year 2021 will be from April 2020 to March 2021. If this question is for assessment at 2021, the answer of 75,000 will be right. But in case if this question is for assessment at 2021-22, the pension will be received for the full 12 months. So therefore, what will be the answer for this question? So 12 into 15,180 less the standard deduction of 15,000 under section 57. So therefore, the correct option therefore will be 1,65,000 under income from other sources. So therefore, if you are able to eliminate the option, narrow down the option, just like in if you've seen KBC, we have to sometimes reduce it to 50-50. So therefore, what we essentially need to do, reduce it to or reduce the options. Thereby, it becomes easier. First thing, it cannot be salaries. Two, it cannot be 90,000 IOs because there is a standard deduction of 15,000 is not there. So it should be between C and D. Most people go for C, but unfortunately, the correct answer is D. The general trend in the examination, you always get a answer which is opposite to the most logical answer. That's a general trend in the examination. So right. So are you just comfortable or able to take care of this particular point? Yes. So what we'll do is we'll go to another interesting question. We'll just have a mix of questions so that becomes more easier. So Mr. B's total income consisted of winnings from horse races of 5 lakhs. The tax payable by him for assessment year 2021-22. So 1,43,000, 1,56,000, 65,000, 78,000. So B's total income consisted of winning from hard services of 5 lakhs. The tax payable bearing for the assessment year 2021-22, 143, 156, 65,000, 78,000. So now what is the catch here? So now there is a winning from hard sales of 5 lakhs. The tax payable bearing for the assessment year 2021-22, 143, 156, 65, 78. So therefore we need to understand the catch in the question. So winning from horse races are going to be subject to tax at a flat rate of 30% under section 115 BB of the Income Tax Act. So under section 115 BB of the Income Tax Act, horse races will be subject to a 30% flat rate of tax. Now the only question which is very important and pertinent here is that whether you will be eligible for basic exemption limit of 2,50,000. So can I apply the basic exemption of 2,50,000 and then apply 30%? That's the first point. But for winning from horse races or lotteries or other casual income, one point you must bear in mind. You are not eligible for any basic exemption limit. So the basic exemption limit is not available for winning from horse races or lotteries or any income which is going to be taxable under section 115 BB. Now, once you understand this particular point, what is the advantage of it? C and D both are going to be knocked off because 30% of 5 lakhs will come to 1,50,000, right? So therefore, straight away they are gone. So 65 and 78, you don't have to consider at all straight because there is no basic exemption limit available for lotteries or horse races. Now that just leaves the option of only A or B. So what is the next issue in the question? The next issue in the question is whether rebate under section 87A is available. All of you will be aware of under 87A, a resident individual will be eligible to claim a rebate under section 87A provided 1 is a resident, 2 his total income does not exceed 5 lakhs, and 3 he can claim rebate of the entire tax or 12,500, whichever is less. So therefore rebate is available to an individual, rebate is available to a resident, rebate is available if the total income does not exceed 5 lakhs. Now, the amount of 12,500 of rebate or entire tax may indicate that the rebate is available only for incomes which are taxable at the normal rates. Only when the income is taxable at normal rates, it should be available. That is the intention. But while executing the section, the law does not prohibit the claim of rebate under 87A. The law does not prohibit the claim of rebate under section 87A except for 112A. 112A is applicable for listed shares on which STT is paid, all of you may be aware of, you have to pay a tax at the rate of 10% of long-term capital gains in excess of 1 lakh will be subject to 10% tax, provided STT is paid. STT is nothing but security transaction tax. Except for long-term capital gains in the 112A, 87A does not say rebate is not available for any income. That means a rebate is also available for winning from lotteries or RSS, provided you satisfy the other condition of the individual, resident, and that the total income should not exceed 5 lakhs. Those conditions satisfied, you are eligible to claim. You are eligible to claim rebate under 87A for winning from horse races also. So therefore, it becomes a lot more easier. Once you are eligible for rebate of 12,500, so it's going to be 1,50,000 minus 12,500. That means it automatically rules out option B as the answer. That means you are left out with only one option, which is option A. So therefore, that's the process which I'm talking about. So you should know if you have applied the basic exemption limit here, then you would have applied 30% of 2,50,000. Option D becomes one of the options. The moment you know 115BB is not eligible for basic exemption limit, you eliminate C and D. So that just brings only A and B. And once you know 87A rebate is available, then the option becomes here. Don't make any working. You should never do calculation in MCQ. We have to just keep eliminating it all. Don't worry about the numbers. Now, why you want to calculate for 2,50,000 is not there, 5 lakhs into 30, 150, less 12,500, 137,500, then 4% education says, and health and education says, don't go that working and all. You are not there to put the number because you don't have the time, right? You have only how much? 1.8 minutes per problem. So that means what you should do is do a simple elimination. DC is gone because basic exemption limit is not available. B is gone because 87A rebate is available. So that means options A. So that way, if you're going to do, never ever do a working in MCQ as far as possible, unless the question itself requires the working. So before I continue, I just want to really find out, are you able to follow? You're okay, fine with the methodology, the description, explanation. So let me just see your comments section. So then we'll go to the next problem. So guys, how fine? Are able to now Jayalakshmi or Gayatri would have known that why B is not the correct answer, right? So it's a good guess, but only thing is that how it's not going to work. This is what we are trying. So 156 is actually a very good answer. But however, why that is not the answer? Because availability of rebate under 87A. I already told you, generally in MCQ, the answer will always generally not be what looks like a correct answer may not be the answer. That's how generally the MCQ system works. So that's what we should always ensure that. Just think for a second. Right. Good. So we'll just go for another equation. I'm sure that this explanation helps you in approaching the entire MCQ in a different dimension. So let's try another equation now. So a total income of LLP for the assessment at 21-22 amounted to 15 crores. So the LLP will be subject to a surcharge at the rate of 37%, 12%, 25%, or 15%. So what surcharge you should apply? 37, 12, 25, 15. Now, the only point what has been tried here is that there is a last year onwards there is a surcharge have been increased. So earlier it used to be only two surcharges, 10%, 15%. The 10, 15 has been further increased by 10, 15, 25, and 37. But what you must understand, those increased surcharge are only for individuals. They are not for LLPs or partnership firm or companies. For a limited liability partnership, so you have only one point. So up to 1 crore, no surcharge. So once you cross 1 crore, there will be a surcharge of 12%. That's all. Only for an individual, up to 50 lakhs, no surcharge. 50 lakhs to 1 crore, 10% surcharge. 1 to 2 crores, 15% surcharge. 2 to 5 crores, 25% surcharge. Above 5 crores, 37% surcharge. But what is very important is 4 surcharges are there only for the individual only. But for LLP and a partnership firm, up to 1 crore, no surcharge, thereafter 12%. If you take the case of companies, up to 1 crore, no surcharge, 1 to 10 crore, 7%, above 10 crores, 12%. So whereas for a limited liability or a partnership firm, it's only 2 points. Up to 1 crore, above 1 crore. Up to 1 crore, no surcharge, thereafter 12%. So therefore, since last attempt also they asked the question on AMT or alternate minimum tax. So you cannot do an AMT equation unless you know the tax rates, normal tax rate of a LLP. So that's why I thought I should add this question. So for an LLP, only only one limit up to 1 crore, no surcharge. Thereafter, only 12%. So therefore, only one surcharge for a partnership firm or LLP. If it is a company, there will be two surcharges. Up to 1 crore, no. 1 to 10 crores, 7%. Above 10 crores, 12%. If so, that is one thing which I just wanted to understand. So relatively a simple equation, but with the AMT coming up now, I think normally we should also know the normal tax rates. So that is the reason behind this particular question. So let me, I think this doesn't need another detailed this thing. So we'll go to the next one now. So let us look for this one. Mr. C's total income consisted of a long-term capital gains of 5 lakhs. During the previous year 2021, he was out of India for a period of 306 days. Before the current year, he has never left India. The tax payable balance for the assessment at 21-22. Is it 91,000? Is it 1,04,000? Is it 39,000? Is it 52,000? So just let me just give you some time to just think over. So we'll just see. I'll wait for your answer. Just make a try. Or just put in the comments box. Not sure. Okay, I'll explain this question. So now you have first what we have to find out is the residential status. What was the residential status here? So in 2021, he was out of India for a period of 306 days. That means how many days he was in India? So total number of days 365 minus 306. The number of days stay in India is 59. The number of days stay in India is 59. Condition number 1, stay in India for a period of 182 days. Not satisfied, you are a non-resident. Right? So condition number 2, stay in India for 60 days or more during the previous year and 365 days or more during the preceding 4 previous years. So there are some exceptions are there. I don't think that is required in this particular context. So second condition is also not satisfied. So therefore C becomes a non-resident. Right? So it becomes a non-resident. Now once you become a non-resident, some interesting points you must bear in mind. In the last question we discussed about this particular point, that rebate under section 87A is available only for resident individual. So only for a resident individual you will have rebate under section 87A. So that means 87A is not available. Now once 87A rebate is not available, I don't think the answer is going to be 91,000. That is ruled out, right? So that's got no chance of you getting that answer. Now the question here is that, will I get the basic exemption limit? See, basic exemption limit is available for non-residents also, but it is not available. It is not available for long-term capital gains. So for long-term capital gains, short-term capital gains under 111A, or for long-term capital gains 112A, the basic exemption limit is available only for individual and Hindu undivided family who are resident in India. So only for individual and HO for resident in India, you will have the basic exemption limit. Once the basic exemption limit is not available, straight you are closed in with option A. CD automatically gets eliminated because 20% of 5 lakhs comes to 1 lakh. So 4% says adds to 1,04,000. But I don't think you should even try to make that calculation, right? Once you know that A is not the answer, C is not the answer, D is not the answer, don't worry about that. You just put it as B. Never try to confirm it is 1,04,000, right? Because you will not have the time in the exam. Maybe while working out in your house, you can try, but not in the exam hall. A is not there, C is not there, D is not there. That's all. So once you eliminate C, D, A, would even check whether that amount comes correct. The working you do for multiple choice question will be time consuming. You will be spending more than what is required. Just visualize for this question you have to answer in the examination within 1.8 minutes. You have to write within less than 2 minutes. So therefore, always keep in mind there is no necessity for you to check the numerical accuracy. And I know that it cannot be A, it cannot be C, it cannot be D. Therefore, the answer is B. Don't exactly arrive at the number. Maybe in your house when you practice, yes. Not when you are trying to do this question. When you are trying to do this question in the examination, that you should never try. So a small extended point. So just we are trying to add instead of 306 days, I take it as 305 days. So now, how do you eliminate? So again, once it is 305, 365 minus 305, 60 days. 365 days is going to be satisfied because it's clearly given in the equation. Clearly given in the equation that before the current previous year, it's never left India. That means the second condition is going to be satisfied. Once the second condition is satisfied, it becomes a resident, right? It's going to become a resident. So once you are a resident, you are eligible to claim the basic exemption limit for long-term capital gains. So you are eligible to claim the basic exemption limit for long-term capital gains. So that means A and B cannot be the answer, right? Straight away you can eliminate. So therefore, what happens as a result of it? It has to be between C or D. Only for your understanding, I'm giving you what is the significance of C and D. But don't try in examination for the sake since I've been mentioning for quite some time. Now, 13A or 52 is going to depend upon your understanding of whether 87A rebate is available or not. 87A rebate is not available only for 112A. It is available for 115BB. It is available for 112. It is available for 111A. It is not available only for 112A. Now, once you understand it is available for 112A, so that means you are eligible for 12,500 rupees of 12,500 rupees of rebate. So I don't even have to work out. The answer cannot be 52,000. The answer cannot be 91. The answer cannot be 104. It has to be 39,000. So how you get it? Which is 20% of 2,50,000, 50,000 less 12,500 rebate 37,500. Then 4% says that takes it to 39,000. But should we have to do it? The answer is no. Never do. You can do it in your house, not in the exam. So 52,000 of answer does not factor 87A. 91,000 and 1,04,000 does not factor the basic exemption limit. So what should be the answer for the equation? C. That you don't have to confirm by making a working, which will not give you enough time in the examination. So that is the key, right? So do you find you are able to appreciate the explanation? Are you all guys fine with the speed? Fine with the explanation? Confident? The one problem is unless you put in the comments, I will not even know that whether you are saying yes, no, and all. So feel free. It's your class, your session. So we can have some more. I know some of you may be in the mobile. So yeah. So Aditya, what is important here is that you have to first understand is a resident, because 365 days minus 305, 6 days in the previous year. He has never left India. So therefore 365 days or more condition would have been satisfied. So therefore the first point here is that he is a resident. Once you are a resident, you are entitled to claim the basic exemption limit for long-term capital gains also. The basic exemption limit is not available only for non-residents. For a resident, basic exemption limit is available for LTCG. So long-term capital gains are going to be taxed at the rate of 20%, but 20% will be after considering the basic exemption limit. So if I consider the basic exemption limit of 2,50,000, So 5 lakhs minus 2 lakhs 50,000. So 5 lakhs minus 2 lakhs 50,000 into 20%. So that will come to 50,000. So I am eligible to claim 87A rebate because 87A rebate is available for long-term capital gains also. So that means my tax payable comes to 37,500 before cess. Right. So no, before cess it's 37. So therefore we eliminate A, we eliminate B, we eliminate D. So therefore the answer will be C. I just want you to go by the elimination as a base. Right. So you are eligible to claim rebate, you are eligible to claim basic exemption limit. Right? Understood? Aditya, Pooja, got it? Yeah. Manigandan, don't worry, it will be there. So it will be there in the YouTube. You can watch as many times you can. Not an issue. I will also share this document also. That also you can have a look at it. So with reasons for each question, I will share the document. I will share the both Word document and PPT. So therefore, you can always go back, just have a look at it. What happened? Sudden silence. Sure. We'll share the important topics. We'll also share whatever we have. We'll do that, Samita. Don't worry. So we're there to support you. So next 1 month, focus on the examination. Nothing else is required. So feel free for any support. We are there. Right. So now we'll go to the next one now. So we'll slightly move out of the tax working. Right. So just read out the equation now. So C is orthopedically physically handicapped with disability of lower extremities. He received 50,000 as a transport allowance. The amount exempt under section 1014 read with rule 2 double B 38,400, 19,200, 9,600, 0. So there is a 50,000 of transport allowance. What will be the amount exempt from tax? 38,400, 19,200, 9,600, 0. So very interesting question. So see, Arun Kumar, so one thing which possibly after the 6 or 7 MCQs, uh, if I'm in your position, what I would have done, I would have taken the cue from what I've been saying. So I was always saying any multiple choice questions in general will always have an answer which is against the normal answer. So whatever it comes to you naturally. So generally the MCQs are designed in such a manner where the answer to that question will be different from what we normally think. So therefore, when I'm saying this, so I'm finding out Pooja, Srivats and all adding the answer of D. I already given a hint, right? So now when the standard deduction was introduced, after eliminating the exemption which was earlier available for transport allowance. The transport allowance earlier was available to the extent of 1,800 rupees per month, right? So, sorry, 1,600 rupees per month. But however, when the transport allowance was 1,600 per month for physically handicapped, the allowance was 3,200 rupees per month. That is double of the transport allowance. When the standard action was introduced, they decided to leave out the transport allowance exemption of 19,200, but they continue to retain the exemption for the physically handicapped people with disability of lower extremities. So for them, the exemption was double the normal exemption of 19,200. So therefore, Jayalakshmi, Balaji, and all have got the point which I'm saying. So therefore, the answer is 38,400. So it's a very interesting question because the background of exemption, why it is removed, I told you. But for physically handicapped people, they continue to have this benefit. So therefore, the correct option is option A. So generally, that's always a small tip we should bear in mind while attempting an MCQ. Just slightly try the opposite of the normal answer. That's the general way it works, right? So that's one thing which you always keep in mind. So just trying to go in a random, not a topic wise, just to give you that variety which will normally face in the examination. So Mr. BA, who has been filing return of income, withdraws 30 lakhs from a bank in the previous year 2021, 10 lakhs before 30th June. The TDS to be deducted by the bank nil, 112,500, 60,000, 40,000. So Mr. B has been filing return of income. It was 30 lakhs from a bank in the previous year 2021, out of which 10 lakhs is before 30th June. The TDS to be deducted in bank nil, 112,500. Hello. So this is one question which is based on the amendment. So this section, the question is based on 194N. So 194N till 30th June 2020 provided for deduction of tax at a different point, which is going to be when your total withdrawal in the previous year, when it exceeds 1 crore, you have to deduct at the rate of 2%. But the government found that a lot of people who are not filing tax returns are drawing huge amount. So therefore, what they've said, they introduced a new criteria from 1st of July 2020, whereby, in case if you are not filing tax returns, we will have a slightly different. If you are not filing tax returns, you will have a slightly different criteria. So for non-filers, so you have to deduct TDS at the rate of 2% between 20 lakhs to 1 crore. And if you cross 1 crore, 5%. But for people who have been filing tax returns, the provision continue to remain. So unless they withdraw more than 1 crore, the question of TDS does not arise. So therefore, what has been tried in this question, he has been filing the tax returns and withdraws 30 lakhs. So if we have been filing tax returns regularly, then the limit for the purposes of TDS under 194N will continue at 2% in excess of 1 crore. But if you are a non-filer, if you don't file your tax returns regularly, up to 20 lakhs, no TDS, 20 lakhs to 1 crore, 2%, and above 1 crore, 5%. And most important point is that last year, from 14th of May 2020 to 31st March 2021, if you are liable to deduct TDS, between 14th May 2020 to 31st March, the TDS will be 75% of the normal rates. It will be 75% of the normal rates. But this 75% of the normal rates are not applicable to 194N. 194N does not get that benefit. So therefore, here he has been filing tax returns. So therefore, the tax to be deducted as source will arise only when the amount withdrawn crosses 1 crore. Here he has withdrawn only 30 lakhs. So therefore, the question of applying 194N does not arise. And therefore, the answer for the question will be TDS will be nil. So the only point as I've been mentioning, so just take your time, read the question, then come to a conclusion. So there's another very classic question. So where if you read the question correctly, then you will be in a position to answer in the examination with ease. So no change for 194N for people who have been filing tax returns. Only if you don't file the tax returns, there is a change. So to understand that particular point, what I will do is I'll have another question. It will be a very interesting question. Then I will take, if any doubt you have, I will take that afterwards. So a slightly modified version. I don't expect, I'm not going to expect both of them, but one of them sure. If I'm the paper setter, I'll go for this question. Mr. A was not been filing return of income, withdraws 30 lakhs from a bank in the previous year 2021, out of which 10 lakhs is before 30th of June. The TDS to be deducted with the bank 0, 112,500, 60,000, 40,000. Can we have an answer for this now? So broadly, what we need to understand, what is the issue? So when we are trying to give an answer as 40,000, it's a good answer. Only thing is that the reasoning, that was the attempt, that is the reason why we have the session. It tries to explain what is in an equation. But that's a very interesting answer of nil. So now, when the section will apply? The section will apply if the amount withdrawn in the previous year, that is from 1st April to 31st March, exceeds 20 lakhs. That's the first point. But though the section came into effect from 1st July only, though the section came into effect from 1st July 2020, but what is very important to note, for checking the ceiling, right, for checking the amount, you have to take right from day one, just from 1st of April. So from 1st April to 31st March, the amount has exceeded 20 lakhs. So therefore, one section will apply. The second part of it, though the section is applicable, it will apply only for drawings made on or after 1st of July. So therefore, for applicability section, listen to it carefully. If you have any doubts, please feel free. To check the applicability of the section, we will consider all drawings from 1st of April. So now consider on that basis from 1st April to 31st March crossed 20 lakhs. Therefore, section will apply. But since the section itself comes into effect only from 1st of July, you have to deduct TDS only on 20 lakhs only. And since the amount has not crossed 1 crore, the TDS will be at the rate of 2% of 20 lakhs. So therefore, Bhadra Priya put the answer first. She has got it absolute right. 40,000 will be the answer. For those who took 112,500 option A, yes, you have to be option C. The correct answer is only option D. Section will apply only from 1st of July, but for the threshold, we will take from 1st of April. One of the MCQs which you should anticipate for this exam. It's one of the most likely MCQ for this exam. Watch out for it. Very important MCQ for this particular exam. Clear? Have any doubts? Feel free. So X Limited declared a dividend of 50 lakhs on 1st November 2020. So X holds 10% of equity share capital of the above company on that date. So invested in the company by taking loan from a bank. The interest payable during the year respect of the same amounted to 3 lakhs. So income from other sources, if any, taxable in the hands of Mr. X. So we all know that from assessment year 21-22, dividends will be taxable under other sources. Right? That's the first point. So up to last year, dividends are exempt from tax. The only circumstances which you have to pay dividend in excess of 10 lakhs will attract 10% tax. But now that has changed. Dividends will be taxable on the income from other sources. So only one deduction is available. So which is for interest, and the maximum interest we can claim. So but maximum you can claim is only 20% of the dividend maximum. So you dividends are going to be taxed by IOS. Only one deduction you can claim, which is for interest, but maximum you can claim is only 20% of dividends. Now, once you understand at this point, now the answer becomes a little bit more easier now. So 5 lakhs is the dividend because 10% is my share of equity capital. 50 lakhs is the total dividend. So that means 10% of 50 lakhs will come to 5 lakhs. The interest payable is 3 lakhs. So therefore, a lot of students are expected to give the answer in the examination as 5 minus 3, 2 lakhs. Some of them may continue with what they have already discussed in the last one. So therefore, they may be thinking that it will be exempt from tax. Therefore, they may give the answer as 0. The another set of students might think there is no deduction available. Therefore, they may put as 5 lakhs. So the various points are always going to be there. So, but the correct answer has already been shown there. 5 lakhs is taxable, less interest, which is 3 lakhs, subject to maximum of 20% of dividends. That means I can claim only to the extent of 1 lakh. So therefore, the answer is going to become 5 lakhs minus 1 lakh. So 5 lakhs minus 1 lakh. So the answer will be only 4 lakhs. So see the rate of TDS, I think Vignesh ji, I will first finish off this question so that people are not confused. Then I'll come to your question. 5 lakhs less 1 lakh, 4 lakhs will be the answer for the question. So as far as this question is concerned, I hope Vignesh is asking about 194N in the previous question. So 5% is for non-filers. DDT rate, there is no DDT at all now. There is no dividend distribution tax. So no DDT from assessment year 21-22. So I don't know whether Vignesh is asking that. So Vignesh, the TDS will be 2% for people who are filing tax returns, 5% for the people who are non-filers if it exceeds 1 crore. So we'll have a different TDS rate depending upon whether you are a filer or not. So So on the hope that you have understood the previous question, just let's go through the next one. Right. So now A Limited contributed 12% to the RPF of one of the employees. Contribution amounted to 9 lakhs. The amount taxable in the hands of the employee will be so nil 150, 9 lakhs, none of the above. So very interesting question again. So the employer is contributing 12%, and that contribution comes to 9 lakhs. So should be any amount be taxed? Is the question. Just find out. Do you have some? See, the only thing is that so one noticeable point is that so all of you continue to make the same mistake. So because I told you so many times, what looks like a logical answer, always try to give an answer which is not that. Right? So that is something which we have been trying. So you are right in terms of that particular point, that up to 12% is exempt from tax. But there is also another provision. Employer's contribution to NPS, superannuation fund, and provident fund. If it crosses 7.5 lakhs, then excess will be taxable. So any employer's contribution to NPS, RPF, superannuation fund in excess of 7.5 lakhs. So you have to tax 1,50,000. So beyond 7,50,000, the contribution is 9 lakhs. So minus 7,50,000. So 1,50,000 will be taxable. So it's a new amendment. So any contribution, employer contribution to NPS, RPF, superannuation fund. So in excess of 7.5 lakhs, so will be taxable. Therefore, 9 minus 7.5, 1.5. So therefore, the correct option will become option B. So this is the one thing which requires some working from your side. You just take your time. May take couple of minutes. So normally these kind of MCQs will come for 2 marks. $74.5 lakhs, Mr. Arjun. Why? See what's an answer. Nirud Arvind. So there are 2 points here. So first point here is that one. So what is the consideration for section 50C? That's the first point. For section 50C, there is a concept called safe harbor. That is, if you are within that range of variation, the government will not take your stamp valuation. So what is very important, all of you should understand, the important point here is that variation for 50C is 10% for the full year. For 50C, it's 10% for full year. However, for 43 CA, it is going to be 20% from November, 12th November. Prior to that, it's going to be 10%. So you have to be very careful in reading the question, the examination. Is it 50C or 43 CA? So if it is going to be 50C, you will have only 10% safe harbor. So for section 50C, so 10% safe harbor throughout the year. So that means your full value of consideration full value of consideration is going to be 225 lakhs only. So that is first point. So it is going to be 225 lakhs of consideration. Now what the question is, what is the cost and indexed cost, because the capital gains is long term. So here the indexed cost of acquisition, we need the cost of acquisition. So here you have the FMV is 55 lakhs, stamp valuation is 50 lakhs. So asset was purchased in 1st November 1990 for 30 lakhs. Again from assessment year 2021-22, you must understand one point. Cost can be either cost or FMV, whichever is higher, which is 30 lakhs. So cost of acquisition 30 lakhs or so 30 lakhs or FMV is 55 lakhs, whichever is higher, but it cannot exceed stamp valuation on 1st of April 2001. So the stamp valuation is only 50 lakhs. So therefore, in this particular equation, your index cost of acquisition will be 50 lakhs into 301 by 100. So therefore, in this particular equation is what should be your answer. So if you put 55, so I do not know how you've taken the cost, whether you've taken it as 55 or whether you have taken it as 50 lakhs. So the cost, if you take it as 50 lakhs, then it will be 50 lakhs into 3.01. So 225 is your, so let me do the calculation. So 50 into 3.01, that comes to 150.5 minus 225, so which will be 74.5. So again, if you have taken it as 55 lakhs, then the answer would have been different. So the correct answer will be 74.50. Right? So another thing, either you should expect this as a problem or as a MCQ. Very, very important one. Just watch out for this. I definitely, one of the questions definitely should expect for this exam. For those who missed it out, don't worry. The only question, that's where we are come here to take that niceties. Putting small things is very important. That's crucial. So Vijay madam has come. So her power is back. Maybe she will just give you a small this thing on counting where she left. So Vijay, you can. There will also be a small break for them from tax also. So we will give them tax holiday for some time.
All right. So I'm not really very sure where I had left and where I had really gone out of the meet.
You can start from the beginning.
Yeah, exactly. That's what I was thinking. So in fact, I was keeping on talking. At one point, I just realized there is no, when I asked, are you all able to hear me? There was no response. Only then I realized it's got blocked actually. So anyway, I will just start. So most of the things, the basics and all, Prashant, TGS sir, Mr. Satish, Yesh, everyone has actually given to you. We'll just quickly have a simple glance of, so just don't worry about the exams, as sir was saying, like don't think when is it going to be conducted. Let us be prepared from our side. So what we got to do, let us be prepared. God will take care. Don't worry. all will be fine and will be doing a wonderful job. So don't worry about it. See, precisely group 2, I'm into the syllabus screen. So if you just look at, we have hardly got just 10 chapters in group 2, with of course some small subdivisions in each of the things. So if you are very well prepared, just go for the 3 chapters which I'm going to say to hit a rank, because these 3 are the recurring chapters. Every attempt we get a question, 10 to 15 marks for this chapter in all attempts without fail. A quick run through of the chapter wise analysis of the past question papers also I will show it to you. So just go for chapter 2. You can just quickly note down also chapter 2, dissolution of partnership firms, which was moved from group 1 to group 2. So November 20 was the first attempt in which dissolution was back into group 2. So at least a 10 to 15 mark question, bare minimum, in dissolution of firms and or amalgamation, conversion and sale of partnership firms. It's generally either dissolution or amalgamation, conversion, that way. So anyway, short one question in chapter 2. Then chapter 5 and 6. So are you, sir, screen are you able to see the screen? Yeah, I guess so. So between chapter 5 and 6, again, it's a swap, either chapter 5 or 6 in alternate attempts. So get prepared for chapter 5 and 6, amalgamation of companies and internal reconstruction. Again, even if I say it is chapter 5, it is an extension of this partnership unit 1 and 2. When we do the 30-hour session, the quick revision session, I will show you how come with either dissolution well prepared or amalgamation internal reconstruction well prepared, you can hit both the chapters with the ease, with comfort. So chapter 2, chapter 5, 6, and the last but not the least, chapter 10 on consolidated financial statements. These 3 together account for at least 40 to 45 marks in your paper, right? So 40 to 45 marks with just 30% of the questions, you hit 40 to 45% of the marks is a very big hit. Then just another quick glance of why I say these 3. Now just look at the analysis of the past question papers. It's a chapter-wise analysis. Amalgamation of companies, just look at the marks allotted. Amalgamation, internal reconstruction, chapter 5 and 6, 20 marks, then another 10, so 15, again 15, cycle 1, cycle 2, November 20, that is cycle 1, 15 marks, cycle 2, 25 marks in chapter 5 and 6, amalgamation of companies. Then consolidated financial statements. I'm going backwards now. Cycle 2, 20, cycle 1, 15, then 10 plus 5, 15 marks in consolidated financial statements in November 19, and in May 19, and in November 18, and 20 in May 18. So another 10 to 20 marks in consolidated financial statements. This, if you just look at, it is a recurring chapter. All the attempts you have been questioned on that. And the dissolution of partnership firms, which was the latest introduced one. Since it was the latest one, so you got a question in November 20, 15 marks question on amalgamation and conversion and sale of partnership firms. So it is a short another recurring chapter for you. Now the detailed versions of this, we can just have a look at it later when we are in the class. So with these 3 chapters, you can score minimum 45 plus chapters like banking company accounts, the easy ones where you just got to spend hardly 2 hours in total to score that 10 marks in that chapter. Then accounting standards, of course, just pick on some, say at least 5 standards which had not been asked in the previous attempt. So the hit rate is the first question, compulsory question, 20-mark question, is always on accounting standards. So it's 4 questions of 5 marks each, always on accounting standards. So take at least 5 accounting standards. Now, I will just tell you what to read for these chapters. Go for your study material, the past question papers, suggested answers, and the RTP of the previous, say, 10 attempts, which means 5 years. Anyway, for us, this new syllabus commenced only in May 18, so thereby your choice is like now limited. So May 18 till November 20, just go through the past question papers and past RTPs with your study material. That's it. Not able to go for any other new material, not required at all. Even the question pattern is just a repetition. It's a pick from your study material or RTP or the past question papers. So 80% of your question paper is just from these 3 only. So with just 1 month, and as everybody and with students of this young age, you'll be really perplexed, as I was mentioning. So many COVID cases. We have been like hit to the COVID, family members. So the psychological pressure what you have got is tremendous. And it's really unfortunate that with a pressure like a CA exam, the so-called pressure, CA exam with the additional pressure. But don't worry about this additional pressure, because it's not just you. Everybody is facing all through the world. So we are not left alone in this pandemic. We are not just the one who are facing this pandemic. So everybody is facing. Be positive. Pray to the Almighty. Be positive, and just hope that, wish that, and keep. Let us just ask God to keep us healthy and with a strong mind. That's more than enough. Do your best. And what I've said, these 3 chapters is only for this 1 month preparation. If any of you are by chance going for this November attempt only, you have all the time in the world. So don't worry, you can go for all chapters with more weightage to these 3 chapters, right? All the very best. Stay safe, stay healthy. Health is the first priority from what I'm getting more from my students, some of whom have this hesitation of whether at all to go and write the exam. So many things will go on in mind. Just keep preparing well. Leave everything to God. He will take care, and things will be all right soon, and all will be put into the real happy past scenario back. Okay, all the very best, students. Take care. Sir?
Thanks, Vijay. Thanks for your time. So, we'll see you soon. Right. So now we'll go to the next one. Right. So now we'll have a slightly different topic. So 3 minor children has been clubbed in the hands of father with 1,300, 1,800, 2,000. So how much will be exempt under section 1032? So I have 3 minor child. So each of them have income of 1,300, 1,800, 2,000. So what will be the amount exempt from tax? So it's a very interesting question. So now the main issue is that we all know the exemption is available to the extent of 1,500, 1,500 per child. The only question is that is it going to be restricted to 2 children or not? That is one. And whether that 1,500 is it going to be a flat exemption? So those are the few questions which was the talking point here. So what has been tried in terms of that? So now the exemption is not flat 1,500, right? It is the actual income or 1,500, whichever is less. So therefore, in respect of the first child, you will get 1,300. The second point, is it going to be restricted to 2 children? The answer is no. You can claim exemption for any number of children here as far as 1032 is concerned. So therefore, here first child 1,300, you'll get 1,300. Second child 1,800, you'll get 1,500. Third child, you will get 1,500. So therefore, it's going to be 1,500, 1,500, and 1,300. So therefore, you will have 4,300 as exemption. That means for first child, 1,300. For the second one, 1,500. For the third child, 1,500. Total will be 4,300. So 2 points which are very important here. Exemption is up to 1,500 per child, and there is no restriction on number of children. So therefore, your correct answer will be 4,300. There's no problems at all in terms of number of children, but your exemption cannot be more than the actual income earned. So that is on this question. So it's another question we'll have on clubbing of income. I'm just trying to cover cross section of the chapters. Master Arun won a quiz competition for 10 lakhs using his skill in intelligence. His amount was deposited in the same bank account. The interest earned was 1 lakh. So such interest is taxable in the hands of A. Arun, Arun's father, Arun's mother, or father or mother whose total income is greater. It's a very interesting question. A lot of times this question has come in the examination. A lot of times. So the basic issue here is that we all know that 64(1)(a) will not apply for not applicable for income earned on account of application of skill, talent, etc. That is one point. So on account of application of skill, talent, etc., if you're going to earn the income, clubbing provisions will not apply. That's the first point. But here, what the question is asking you is whether the interest earned, whether that interest earned, what is the source for that deposit? It is on account of application of skill. Right, to that extent, it's right. But when that amount is deposited in the bank and the interest is earned, whether that can be called as income on account of application of skill. So here, the interest on investments made out of the application of skill cannot be called as a income earned out of that. So therefore, this interest on investment made of application of skill, section 64 1A will apply. So therefore, the difference is very crucial. So whether the income is on account of application of skill, whether it is applicable only for that income, or it will also apply for investments made out of the same. Unfortunately, it gets restricted only to the application of skill. If that income you put somewhere, that is not eligible for the benefit of exception given under 64. That's a very interesting point. So that's why you have to be slightly careful. The difference between application of skill and income which is earned out of the same. So both are slightly different. So very tricky question. A lot of times it has been tried in the exam. A lot of times, not once. Many times I've asked this question. So just let's try one more from the clubbing itself. So income of Mrs. C is greater than that of Mr. C in year 1. The income of C was greater than that of Mrs. C in year 2. There minus an earned income of 1,01,500 in both years. In year 2, 1 lakh should be taken in the hands of Mr. C, 101,500 in the hands of Mr. C, 101,500 in the hands of Mrs. C, 1 lakh in the hands of C. So again, what is very, very important here is that the elimination. First, don't worry about first out of the 4 answers, take out. So what are all which are going to shake out? That's the question. So I will not consider in this particular case the answer of 101,500 because in one of the problems itself we discussed 64 1A is eligible for 1,500 rupees of 1,500 rupees of exemptions available under 1032. So therefore the answer cannot be 101,500. It has to be only 1 lakh. So first we'll do that because you get 1,500 of exemptions, it is automatic. So therefore the after considering the exemption of 1032 of 1,500. So the amount to be clubbed is only 1 lakh. So to that extent, you can eliminate the answer of 101,500. So therefore you can knock off B and C. So it has to be between A and D. Now in A, 1 lakh will be included in the hands of Mr. C. D, 1 lakh will be in the hands of C. So what is the provision? So what section 64(1)A says? It should be included in the hands of parent whose total income is greater. That's the first year. But once the income is included in the hands of one parent, once the income is included in the hands of one parent, then the income will be continued to be included in the hands of same parent unless it is necessary so to do. So once the income is clubbed, and then so it will be included in the hands of same parent in the subsequent years. So unless it is necessary to do so. So the only question which needs to be considered here is, can we now say, is it necessary? Can the income tax officer come back and say, it is necessary because the total income of the other parent is greater than the second year, therefore it is necessary. But what the courts are saying, necessary cannot be on account of revenue. Necessary means there must be some compelling reasons. There must be some compelling reasons apart from benefit to the revenue to justify that. Right? So you cannot only on account of revenue change from one parent to another. Necessary means something beyond revenue. Maybe that due to COVID or any reason the other parent would have died. That could be some reason. But that could be the reason, and it cannot be on account of revenue. So therefore, the correct option is, so income will be clubbed in the hands of Mr. C's income is greater in the first year. Therefore, correct answer is option A and not option B. So D is not the option. So you have to include the income in the hands of same parent only. Right? What happened? Some Shruti has come down. Tired. Very hot. Comment box காலியாவே இருக்கே. Minimum comments, maximum doing. It's like minimum government, maximum governance. அது மாதிரி சார் வி ஆர் என்ன எஸ்ஆர்னா என்ன வெயில் ஜாஸ்தி அந்த அந்த எஸ்ஆரா இல்ல தட் எஸ் சார் ஃபார் வாட் ஆன் ட்ராக் getting the grip of it. என்ன கான்ஃபிடன்ஸ் வருதா குறையுதா better now or ignorance is a blessing? Good. So it's going to be a slightly tougher option. So SAC sold a building on 1st June 2020. Depreciation has been claimed for 40 lakhs. WDV is 16.2 lakhs. Cost when purchased on 1st April 2018, 20 lakhs. So the SSC invested the capital gains in REC bonds. The capital gains chargeable tax will be 3.8 lakhs of STCG, 23.8 lakhs of STCG, no capital gains, and 23.8 lakhs subject to taxation. It's a very interesting one. Very definitely, it's of all the questions, maybe I would say this is the toughest of the lot. Let's see. So 23 lakhs 80,000 short-term capital gains. One answer. Then so here, what is the catch? I think Srivatsan. So I think we are almost close to 2 hours of the session, right? So the only point is that prima facie, you are right. But again, I told you many times in MCQ, the question will be slightly different from what you. So 23.8 lakhs is what we call it as a more logical answer to the question. It's a good answer. Good answer. There's no doubt about it. It's always you must understand the good answer need not necessarily have to be correct answer. Sophia seemed to have got it right. So the point is that what is this nature of this capital gains? Is it a short-term capital gains or long-term capital gains? Any capital gains on sale of depreciable asset, any sale of depreciable asset is a short-term capital gains, right? That's fine. So cost of acquisition will be WDB at the beginning of the year. So therefore, to that extent, what has been written is right. So therefore, cost is 16.2, sale is 40, 23.8 lakhs of short-term capital gains. Exemption under section 54EC is also available for long-term capital gains only. Therefore, prima facie, Srivatsan has given a very good answer that 23.8 lakhs is short-term. But however, first thing is that building has to be held for a period of 2 years or 24 months to become long-term. One point you must understand in this question, you should consider both date of purchase and date of sale. Both you should consider for short term or long term. So if you take 1st April 2018 to 1st June 2020, it's held for more than 24 months. It is going to be long term capital gains provided section 50, which deals with depreciation, is not there. That means it is a long term capital gains which is considered as a short term capital gains by section 50. But what the Supreme Court says that is only for computing your capital gains. But for 54 EC, this capital gains will be only long term. So But it's very interesting, very tricky point, very difficult at the intermediate level to understand. What you must bear in mind, this is a short-term capital gains for the purpose of calculating the capital gains. But for 54 EC, Supreme Court said this is a long-term capital gains only, because Section 50 says this capital gains, those will be considered as short-term only for calculating the capital gains amount. Now, it is not saying for the entire chapter this will be considered as a short-term. It only says for calculating the number of capital gains, amount of capital gains, we will take it as a short-term. But for 54 easy, go by the general rule. Building held for more than 2 years or more than 24 months, long-term. Therefore, for 54 easy, it will be long-term. For computing the capital gains, it will be short-term. So therefore, as Sophia has given a beautiful answer, she has brought the Supreme Court decision correctly. The answer therefore will be nil, because the entire amount has been invested in the RAC bonds. So when you put the entire amount in the RAC bonds, you are eligible to claim exemption. It's a very tricky point. So I will just put it across with a very tough point. Sale of depreciable assets will be short term for computation and long term for 54 PC. I think this is where we'll start scratching our head. This is the beauty of income tax. For calculating the capital gains, it is short term, but for 54 EC, it will be long term. The reason is Section 50, the relevant section, does not say it is long term for the entire capital gains chapter. That's the problem. They're saying it is short term only for computing the capital gains. So that's why this question is a very interesting one, very tough question, but that's how sometimes the law is all about. It's a very interesting one. So any thoughts on this? So if you are fine with the previous one, we can go to the next one. So SSC owned a personal car purchased for 6 lakhs in 2012-13. Same was sold in 2020-21 for 5 lakhs. So it's a long-term capital gains of 5 lakhs less index cost of 6 lakhs. That is 5 lakhs minus index cost, or LTCG 5 lakhs minus cost of 6 lakhs, STCG of loss of 1 lakh, or you don't have to pay tax. For the question, Srivasan, for your question, you can invest in 54F also. There will be a proportionate exemption. Exemption is available even if you put in another house, residential house. Right. So motor car, it is used for personal purposes as per section 2, subsection 14, definition of capital asset. So capital asset will not include personal effects, motor car held for personal use. Not a capital asset, a capital gains. So the capital gains bond scheme, the 54 EC Stevenson. That's what we have already taken as equation. So bond scheme is 54 EC. See what's in clear, huh? The bond scheme, the 54 EC. See, if the car is used for partly personal purposes, introduced in business use, definitely capital gains will rise. Then becomes a depreciable asset. So therefore, it is no longer a personal effect. So partlyனா கார் ஒரு பார்ட்னு தனியா சொல்ல முடியாது. ஸோ ஃபர்ஸ்ட் ஃப்ரண்ட் வீல் பர்சனல் யூஸ், பேக் வீல் பர்சனல் சொல்ல முடியாது இல்லையா? ஸோ கார் செட்டில் இட் பிகம்ஸ் டெப்ரிசியேஷன். இன்ஃபேக்ட் இஃப் யூ ரீகால் இன் பிஸ்னஸ் இன்கம், you also have section 38, which says if your car is used for both personal and business purposes, proportionate depreciation can be claimed. So, so can we do one thing? So what we will do is now, see, it may take another, at least we should do business income. A lot of other chapters are there: house property, clubbing, set off. Clubbing, of course, we have done some deductions, tedious filing of tax returns. I got a lot of chapters we need to, at least we do. See, business income is a big chapter. We need to do some reasonable number of questions. So we'll do one more session, maybe like, because it's already 12 o'clock now. So if it, I don't think it'll may need another 2 hours or so. So let's not cramp you too much. So what we will do is for it, on Tuesday morning 7 o'clock we'll do it. Okay. Sorry, not morning. So we'll do it on Tuesday evening at 7 o'clock, right? So you will also be. So one thing is that one, you will be more fresh, and secondly, you are also not be more prepared now.